Let's also bring on board Vivek Mavani, the independent investment advisor, joining us on the show right now to talk about his take on the fundamentals, along with, of course, Mayuresh Joshi, who's already with us. Vivek, hi, morning. We've got Eicher Motors numbers today. What's the expectation? Because if the monthly sales data is anything to go by, you should see a 30% volume uptick coming in from Royal Enfield. But with the stock high at 3,300 thereabouts and the stock currently floating at 3,000 thereabouts, if the numbers are in line with estimates, do you go ahead and buy the stock further?
Well, as far as Eicher is concerned, it's a curious case in the sense that the price already builds in, I would sense more than 30% volume growth for not just this year or the year gone by, but for several years to come. And last few months, if we were to, as far as the data is concerned, seem to have disappointed the street in terms of volume growth for Royal Enfield. Coming back to the stock, my sense is upside on this is limited. More likely, it could disappoint going forward over the next few months or couple of quarters. But by no means I'm bearish on the stock. I mean, it's just that I would probably not buy it at these levels, but maybe 10, 15, 20% decline. I mean, a sort of a correction which in a normal bull market through the year, stocks do pull back 10, 15, 20%, and that's the time that I would look at it.
Eicher is already down 20%, but I mean a 33,000 rupee or 34,000 rupee stock came down to 27, 28,000. So the correction already has kicked in, some would argue.
Well, if we still look at the valuations and the, I would say the growth expectations, my sense is we'll probably tomorrow, day after, we'll see several more downgrades coming in than upgrades. That's my sense.
Okay. Let's throw an ICICI Bank. Which corporate bank would you like to buy, ICICI Bank or Axis Bank?
Well, quite honestly, none. I mean, neither Axis or ICICI. The street would like to believe, and rightly so, because everybody is invested in ICICI and Axis, so everybody has a vested interest. In that sense, all of us want both of them to go up because we have an interest in them. But history suggests that there never is one cockroach. I mean, if you were to actually get down to cleaning, it's never one cockroach, there's a whole lot of it. And as far as Axis is concerned, they've been cleaning up last 4 or 5 years that we have been just quarter after quarter. Sorry?
There's nothing left to clean now. They've cleaned up everything. That's the whole thing. I mean, you've just followed the RBI guidelines, and now as per the RBI guidelines, there's nothing left to clean up because your problem sectors were steel, power, telecom.
Well, so you can say that there's nothing to clean up only after you have written off 100%.
Exactly.
I'm saying that, and that is unlikely to happen. Same is the case with ICICI. I mean, just about a month back, I mean, the whole buzz about governance, about ethical issues at the senior management, and the I would say the directors, the hurry in which they gave a clean sheet to Madam Kochar. I think a lot more is desired in terms of better corporate behavior. Probably the stock builds in certain amount of bad news, but if any further bad news was coming our way, which I will not be surprised at, so I would probably stay away from both ICICI and Axis. I mean, it's like a choice between losing an opportunity and losing money. I'm willing to let go of the opportunity, but I really don't have tolerance for factors which are beyond my control, which are more to do with governance and ethics and accounting issues in terms of whether they have accounted for the bad loans correctly or not.
Okay, fair point. You know, everyone's entitled to their view, although this is a contrary view, I must say, because since yesterday everyone's saying ICICI Bank is a buy now.